Hi, everybody. I'm Brittany Lewis, a reporter here at Forbes. Joining me now is my Forbes colleague, staff writer Zach Everson. Zach, thanks for coming on.
Thanks for having me on again, Brittany. Appreciate it.
The RNC wrapped up in Milwaukee this week, and you are reporting, quote, yet another Trump is converting donor funds into personal income. Talk to us about who.
This time it is Lara Trump. As we know, she is the co-chair of the RNC, which is the number 2 position, having just been voted in there a few months ago. And looking through the latest campaign finance reports, you see that the RNC is paying her what looks like it'll be an annual salary of $163,000. So, certainly something that looks competitive and a fair salary, assuming she's doing the job that she was elected to do. But it's also, just another example of a Trump family member pocketing GOP donor cash.
So what is her specific history of being paid donor funds?
So in this case, this is the first time her name has actually showed up in FEC records as a recipient. Does not mean it's the first time she's received donor funds, though. Back in 2020, HuffPost reported that the Trump campaign was paying her, along with Kim Guilfoyle, salaries, but they were not being paid directly. Instead, they were kind of being paid as like subcontractors almost. The money was going to then campaign manager Brad Parscale's company, which was then in turn passing the money out to Laura Trump and Kim Guilfoyle.
I do want to take a couple steps back here. And aside from being the daughter-in-law of the former president, who exactly is Lara Trump?
She's married to Eric, and she is a former TV personality. I believe she was a producer with Inside Edition. She also toyed with running for Senate in 2020, I believe it was, did not end up running. But she's been pretty active in the campaign. Most notably, she was hosting a online show on, I believe it was on the president's Facebook page several years ago, where it was like a daily news show, but done specifically just for the campaign. The reason the campaign was paying her previously was that I think her title was senior advisor or something along those lines.
And so if we remember RNC chair history, Ronna McDaniel was actually the chair for a while. Now there's co-chairs, Lara Trump as well as Michael Whatley. So how does her 6-figure salary compare to his?
It's significantly less. So it's one of the things that's confusing is that it's the second person in charge is the co-chair. There aren't 2 co-chairs. There's a chair and then a co-chair. He makes significantly more than that, but it seems like he might also have more on his plate. He pulls in about $330,000 annually, according to FEC filings. But he's also the RNC's general counsel. So you're not just getting somebody who's heading the group, but you're also getting an attorney there as well.
And what about her counterpart at the DNC, chair of that, Jamie Harrison?
Yeah, so Jamie Harrison's actually a little bit higher up than where she is because he is the head of that. There was no applicable person to compare it to in the DNC because all of their number 2 person is called the vice chair, and they have like 6 of them, and I believe 5 of them were elected officials who have other jobs. There was one other person there whose name didn't pop up. But Jamie Harrison makes $177,000 a year in his job, which these days seems to largely be getting in Twitter fights with Nate Silver.
And you've reported about this before, but remind us how Donald Trump, as well as his family, has turned donor funds in the past into personal income.
So the RNC has forked over at least $3 million to Trump's businesses since 2016. Which is a whopping sum, to be honest, especially when you compare it to the fact that prior to him assuming control of the party in 2016, they had only spent $39,000. So, Trump has businesses all over the place. They weren't going to them until he was in charge of the party. So they paid his businesses $3 million. And then Donald Trump Jr. also has gotten in on the act, again, not directly, but in 2019 and 2020, the RNC bought a total of about $400,000 worth of both of his books. So, he didn't get all 400,000 of that. There are obviously some costs involved with books, but he would have gotten some of it, in addition to getting a boost on the charts. That would have certainly helped him with bestseller lists.
And is there any indication that this is going to continue as the campaign heads into November?
Yes. I mean, she's still in that job, so it seems like Laura Trump is still obviously going to be bringing in a salary, and there is no sign whatsoever that the Trumps plan on stopping billing the RNC and other political entities for this. So I suspect we will continue to see this for as long as Trumps are high up in the party.
Zach Everson, per usual, thanks for your reporting.
Thanks for having me on again.
Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is my Forbes colleague, senior editor Dan Alexander. Dan, thanks so much for coming on.
Hey, sure thing, Brittany.
You were reporting former President Donald Trump made $550 million during his time as president. I mean, that number is just staggering. But talk first about some of those questions surrounding Trump's finances that took until now to answer.
Yeah, we've known a lot of things about Trump's finances. Obviously, there's been a ton of attention on, what his financial portfolio was like, how much money he could have made. But there are still some fundamental questions that remain unanswered. So we knew how much revenue he brought in, but we didn't really know how much profit, for instance. That's a harder number to figure out because you have to know both the amount of money that's coming in and the expenses that are against that. This story was the first one to really take the whole portfolio over 4 years and on a property by property basis. Say, okay, here's what the operating profits of this business were, and then tally it up over the 4 years. And at the end of it, you do get to that very big number, $550 million.
Can you talk about specifically how you were able to tally these numbers and arrive at the number 550 million?
Sure. So there are several documents that came out while Trump was president, but many more that have come out since he left office, in part through the fraud trial in New York, in part because one of the House committees releases tax returns. And if you combine all of these documents that have come out over several years, you can sort of fill in the gaps and find the missing holes to then figure out, okay, what were the profitability of all of the properties, not just a random one here or a random one there, but each year, the whole portfolio, how much are they bringing in?
$550 million is a hard number to wrap your head around, but I want to talk about just how unprecedented this is. We know a president makes $400,000 a year, so aside from salary, historically have presidents brought in any other additional income during their time in office or anything even comparable to $550 million?
Well, presidents have long had other types of income. One of the more typical ones is, let's say that you publish a book while you're campaigning, and then you collect royalty checks once you're in office. That's a pretty typical thing. But in those cases, we're generally talking about hundreds of thousands of dollars, maybe low millions. $550 million is an extraordinary amount of money. And what's different in Trump's case is that he took this multi-billion-dollar business and rather than divesting from it, carried it into office. And that ensured that these profits that were throwing off, in some cases, more than $10 million a year would continue to do so while he served, which, of course, gave him all sorts of potential conflicts of interest, but also gave him this constant income stream that he had grown to expect.
So, Dan, I would love for you to take us year by year. Let's start when he's inaugurated in 2017. How much did he make that year and how did he make it?
So his earnings that year were $141 million. Now, in every year, the biggest generator of his earnings are really a couple of office buildings that he owns. He has a wide-ranging empire, but really the heart of his earnings come from just maybe a half dozen properties or so. So you're looking at 1290 Avenue of the Americas in New York City, 555 California Street in San Francisco, 40 Wall Street in Lower Manhattan, 6 East 57th Street in Midtown Manhattan. So those are the properties that really are sort of dominating his income statement. Now, interestingly, when he first joined the White House or went into the White House, he was still dealing with a lot of fallout from his campaign. So many of the licensing deals that he had gone away. Of course, The Apprentice was no longer kicking off significant amounts of income. And so that $141 million in his first year, while a lot, wasn't as much as he had been earning, for example, in 2015, the year that he announced that he was going to run for president. Then as he proceeds through the presidency, his business sort of begins to stabilize. And, his golf clubs that weren't doing so well start to do a little bit better. His office buildings are continuing to improve. He's kind of, reaching a point of of stability for the company. And that continues on into 2019 as the economy is doing well and Trump continues to do well. So 18 he makes $154 million, 19 makes $149 million. And then, of course, COVID hits. And that's really when the wheels fall off. And particularly at his hospitality properties. So we're talking about his hotel in Chicago, his hotel in Washington, D.C., his resorts in Scotland and in Ireland, and Doral, his golf resort down in Miami. All of those properties really start to struggle. You see massive losses, millions of dollars a year, where he's having to inject money to keep these things afloat. And meanwhile, his office buildings, which, although they've struggled long term from COVID, in the short term, actually sort of propped him up because remember, he has a bunch of big companies renting from him. And those big companies continue to pay their rents, even though they might not be very happy about the fact that they're locked into 5-10 year long leases. They're still going to pay him in the short term. So that really kept the business afloat. But overall, his profits dropped to $111 million in 2020, which was his final full year in the White House.
During his time as president, he was an extremely polarizing figure. I mean, he still is, but during his time as commander-in-chief, did the nature of his divisiveness, did that impact his income?
It absolutely did. So, his licensing businesses, not just his product licensing business, which was sort of the ties, shirts, that sort of stuff, totally went away. Nobody who's selling a consumer product wants to be associated with a brand that now is going to turn off 50% of its customers. So those product licensing partnerships all dissipated. Then you have the real estate licensing deals, and those ones were sort of a mixed bag. But over time, many of them went away. So as people got close to the end of their contracts, or they just decided, you know what, this is really hurting us year after year, in many cases you saw buyouts. So in Soho, in Manhattan, in Toronto, you see these huge sort of lump payments land all at once while Trump is president, which is nice. He gets a bunch of money in one moment, but then they go to zero the next year or near zero. So you have those sort of licensing businesses all begin to fade away. Now, you also had in some of his office buildings, some tenants who particularly like after January 6th were saying, I don't want to be connected with this guy. I want to be out of these buildings. But overall, in those situations, people were much less able to move out. And also, if you're renting space in 1290 Avenue of the Americas, which is a building in which Trump owns a 30% stake, most people coming into their law firm office in that building aren't thinking about Donald Trump. His name's not on the front of the building. And so he sort of does okay. So those businesses that aren't branded, namely 1290 Avenue of the Americas and 555 California Street, were really some of the standout strong businesses during his presidency, even as some of the ones that were more closely tied to his name began to struggle.
To your point, in your piece, you named one section, 2018, no name, no problem. So financially, for him, when his name's not slapped on a building, he fares better.
Yeah, I mean, in any portfolio, you want to have diversification. In Trump's portfolio, he was very heavy on his own name, but he did have a couple of key assets: 1290 Avenue of the Americas in New York City, 555 California Street in San Francisco, in which he only owns 30% stakes, and therefore his partner is in control of those deals. This is Vornado Realty Trust, a publicly traded company, and he doesn't have his name on it. That provided diversification for him. As many people were saying, we don't want to have anything to do with Trump, or even if they aren't, Democrats or people who dislike Trump, they might still say, you know what, do we really want to hold our, cardboard box conference at Trump National Doral, where there's a good chance that some of the people that we are going to be inviting are going to be offended by the venue. No, let's just host it at a different one instead. And so you have people fading away from those properties in a way that's really, really harmful to Trump. But then, as you say, you have other ones that people don't even know he owns. And in those cases, he tended to perform just fine.
As he reported, he made over $500 million during his 4 years as president. Is there any indication as of now of what he did with that money?
Well, he had to, pay his debts. He had to pay his employees. He had to pay his kids, and he had to live really well. So remember, he still owns several private aircraft. He owns mansions in places like St. Martin and upstate New York and although he sold a couple of them. For instance, there's one in Los Angeles. He still owns significant amounts of personal property. All of that is really expensive. And so it's not like he made $550 million and it all went straight into his bank account and he's kept it the whole time. He has an expensive lifestyle and his business is expensive to run. And so much of that money went toward paying off debts and living large.
During his presidency, he did make a show of donating his salary each year. Is there any indication of how that impacted his bottom line?
It's a non-factor. That was purely a PR stunt. $400,000, whether he keeps it or doesn't keep it, doesn't matter to him. Even over 4 years, that's $1.6 million. Pure rounding error in terms of $550 million coming into his business. So it didn't matter each way. He made the decision to say, I wasn't going to take it or I was going to donate it. He got a lot of coverage out of big checks that he wrote to various places. And certainly a lot of people thought that he was super generous for doing so. But it's the equivalent of finding coins in your couch and figuring out whether you want to give them to your kid or keep them yourself. I mean, it doesn't matter.
As we know right now, he is running for president yet again. Let's say he does win in November. Is there any indication of what he's going to do with his businesses this time around?
Well, certainly if history is an indication, he will hang on to them. And now, of course, he's going to be going into office this time with a new business too, which is Trump Media and Technology Group, the parent company of Truth Social, the Twitter knockoff that Trump started after he was banned from Twitter in the wake of the January 6th riot. So that's going to add a whole nother dimension because, he came in office the first time with a set of businesses that weren't going to benefit from polarization. One of the few businesses that consistently benefits from polarization is social media. And now he's going to own a social media company. So for him to make, outlandish statements or do bombastic things or whatever is actually going to be helpful in driving engagement to True Social. And so he'll have, a financial incentive to do so. Now, that being said, True Social is a tiny business. It takes in very little revenue, makes no money, but investors are really excited about it. And so he might want to do things to keep them excited about it. And then that's in addition to, of course, all of the businesses that he had before and all of the potential issues that come there, whether it's, pressuring Jay Powell to change interest rates or, giving benefits to tenants of his office buildings or, dealing with foreign countries who have impact on his foreign licensing businesses. So all of those things are going to presumably come back into the White House in addition to the social media company the next time if he's able to win.
Dan Alexander, per usual, I appreciate your reporting. Thanks for coming on.
Sure thing. Thanks for having me.
Hi, everybody. I'm Brittany Lewis, a reporter here at Forbes. Joining me now is my Forbes colleague, staff writer Zach Everson. Zach, thanks so much for coming on.
Thanks for having me on again, Brittany. Appreciate it.
You have some reporting on the profits of Trump's Mar-a-Lago since he left the White House, but I do want to take a step back and start at the beginning here. In your piece, you call the Palm Beach Resort one of his, quote, best real estate investments. How so?
Yeah, it's doing really well. He bought it for about $10 million back in around the mid '80s, and we most recently valued it at $325 million. So that's a solid profit margin there.
So at the beginning, in its inception, was it always a successful property, or with the moment when Trump entered politics, did it catapult into that semi-household name?
I would use the word middling. It seemed like it was doing okay. It wasn't a money loser. I'm sure he had better businesses out there, but he certainly had worse. One of the things I looked at when reporting this was just how many times it appeared in news articles in a given year. And at first it was, a few hundred, maybe 1,500 or so. And then it certainly exploded to, after he was elected, where it got to be up to 10,000 in a year. And that's according to LexisNexis, which is as high as it showed. So it certainly picked up and it got a lot more attention once he was in office.
I think it's fair to say that Donald Trump was really a polarizing figure once he was in office. And Forbes has previously reported that really impacted his bottom line. Mar-a-Lago was dubbed the Winter White House. Was it doing well during the Trump presidency?
Yeah, yes, it was. It was doing better than it had been before. Calling him divisive is the polite way of putting it. But it did well. It wasn't nearly as well as doing as strong as what we're seeing now, but it was certainly an uptick. We saw revenue. In 2016 was his first year there was $21,000, and that was up 17% from where it was the previous year, which in turn 2015, which in turn was up 17% from the year before that. So he'd had some steady growth there once he rode down that golden escalator and into the presidential campaign.
But you're reporting that post-Trump presidency, profits at Mar-a-Lago have quadrupled since he left the White House. How so?
Yeah, so it went down a little bit towards the end of his presidency due to COVID, although it was still better than it had done beforehand. But then ever since he left office and has been there a sizable amount of the time, it has shot up. In 2021, it was up 45%. The following year, it was 35%. And then 2023 leveled off a little bit. It was up 6%. The revenue that year was about $40 million. So looking at the time frame we started looking at, it was 2011. Revenue there was $15 million. Most recently, in 2023, the last year we have data for, it was $40 million. So a sizable jump right there.
That is a sizable jump. And is that surprising? Because given that most Americans have a strong opinion about him, either one way or the other.
He doesn't need a lot of Americans to like him for this business to succeed. It is capped at 500 members due to a land use agreement he signed with the county back 20, 30 years ago. So all he needs is 500 people who are willing to pay. And clearly that is, demand for those spots has risen. Originally, before he was in the White House, it was $100,000 was the initiation fee. Most recently, it's $700,000. And the manager recently told Bloomberg that in October, it is going to jump to $1 million. Although at this point, they actually just filled up all of their vacancies and they don't have it, so they have a wait list right now. So we've seen that increase tenfold in, 8 years there.
So initiation fees, $100,000 to $700,000, potentially $1 million. Is that the reason this business is doing so much better, or are the events doing as well? Give us some insight there.
It's a lot of things. I mean, for starters, the initiation fees are pure profit. I mean, that is just money that goes straight to the bottom line. So, when he signed up, he had 4 vacancies this year. They all came in at $700,000. That's $2.8 million right there that they got for not doing anything to boost their coffers. So, yeah, that certainly helps. There is a wait list not a wait list, but you need to book an event there about a year out. And now, events aren't open to anybody. You have to have a member invite you to have an event. But somebody who's had events there in the past told me that it's about a year out that you need to book some space there. So that seems to be doing really well. What's interesting is that the money he's getting from political campaigns, while certainly full of potential conflicts, isn't really doing a ton of business for Mar-a-Lago. At its highest, it only drove about 3% of the revenue in a given year. That said, there are probably other people who are joining Mar-a-Lago or members who keep coming back more often just to see all the politicians who are hanging out there, though.
You mentioned that you had a conversation with someone who hosted an event there. What else did you learn from that conversation, and what is the value of hosting an event at Mar-a-Lago?
So I spoke with Joni Bryan. She is the founder of the 917 Society. That's a group that tries to raise awareness of the Constitution in schools by delivering pocket-sized constitutions. She's had several events there over the past few years, all since Trump left office. Her first one was in 2021. She said, it is more expensive to have events there than where she usually would have them. She's based out in Nashville. But she said the payoff is greater. They can charge more for tickets because Mar-a-Lago is a place you can't really go to every day, and people are interested in going there. And you're also going to get your cause in front of some higher profile people. This did not make it into the piece, but she mentioned to me that at one of the events, there was somebody from Broward County who was on the school committee who was then able to get her organization delivering pocket-sized constitutions to middle schoolers in Broward County. And that was from a connection that was made at Mar-a-Lago.
You mentioned this in your piece, but after January 6th, Donald Trump went to Mar-a-Lago and he was, cast aside. People didn't really know what to make of Donald Trump after that. Then Kevin McCarthy went down there and visited him, and then he was welcomed back into the fold, and we all know how the past 3 years have played out there. But who are some of those other big names visiting the resort?
Well, we've had foreign leaders. You've seen Viktor Orban from Hungary, Netanyahu from Israel. You're seeing Republican politicians going down there regularly. Ted Cruz, Matt Gaetz are some people I've spotted there. And then you're seeing some far right characters such as Jack Posobiec, who's one of the online conspiracy slingers who was responsible for spreading the Pizzagate conspiracy. So you're seeing a lot of those types down there. One thing that's different is that you're seeing more people there in the summer than previously. Trump's campaign is based in Palm Beach. It's not up here in DC area again. And he's spending a lot more time there. So while the club is closed for the summer as usual, you are still seeing some people calling on him there, which is, keeping the club in the spotlight a little bit.
So when you're looking at the profits of 2024, how is Mar-a-Lago doing this year?
I think it's going to do pretty well. We've already seen, and again, this is a small part of its revenue, but spending from political groups that are registered with the Federal Election Commission have already spent $1 million there. They've almost equaled their high, and this is only halfway through the year. They're estimating, it's at full capacity and membership. So, as I mentioned earlier, it also has a pretty significant weight if you want to book an event. And looking at social media, there's been an absolutely, steady influx of events that are being held there, weddings, nonprofit events. So I would suspect that we're going to see revenue along the lines of what we saw last year in the $40 million range.
Zach Everson, per usual, thanks for your reporting. I appreciate the conversation.
Per usual, thank you for having me.
Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is my colleague, Forbes staff writer, Zach Everson. Zach, thanks so much for coming on.
Thanks for having me on again, Brittany. Appreciate it.
You have an interesting story for us about Donald Trump. It's how Trump lost millions on his DC hotel years after he sold it. So first, if you could give us the origin story here, how did he acquire this property in the first place?
Oh boy. So we're going way back to around 2012, where Trump won a competitive process from the U.S. government to redevelop the old post office in D.C., which is on Pennsylvania Avenue, a couple blocks from the White House. There's a beautiful big building that had kind of fallen into hard times. It was like a down market food court. And when I'd have friends come and visit me in D.C., they'd drive by and say, "What's that building?" And I'm like, don't worry about it. Don't get excited. It's not much on the inside. Trump won the government contract to turn that into a hotel, beating out a bunch of other competitors, including one that involved Hilton. And he committed to invest $200 million in renovating the hotel, which he did spend. And honestly, it looks beautiful, both inside and out. And then he also committed to a 60-year lease of paying the U.S. government through the GSA $250,000 a month. So that is how he came into it. The hotel opened in 2016, just a couple weeks before Trump was elected.
I know that you said Hilton. Hilton actually tried to stop him. Can you talk about their plan and what they did? It ultimately failed, but give us some details there.
Yeah, so this consortium that included Hilton Worldwide, which planned to turn the hotel into a Waldorf Astoria, which is one of the main luxury hotel brands that DC did not have. We have Four Seasons, we have several Ritz-Carltons, there's a St. Regis. They wanted to open that as a Waldorf Astoria, and they protested the decision to award the contract to Trump, saying that the General Services Administration just looked at who was going to pay the highest rent. They said that they did not, it didn't seem like GSA properly vetted Mr. Trump. And to make sure that GSA did have the information it needed, they provided pages upon pages of news clippings of the times that Donald Trump had taken hotels into bankruptcy, that projects he started didn't come to fruition, that he stiffed creditors. But the GSA contracting official said on a technicality that there was no actual way for Hilton to appeal that decision. And so Trump went ahead and did open that as a hotel.
Well, did Donald Trump have enough money to buy it in the first place?
That was part of Hilton's thing. Hilton said he did not have enough money. He would not be able to afford it, was the main part of their objection, in that the revenue that he would need to bring in to offset the $200 million he was going to spend on renovating it was just way out of line with what the DC luxury market could handle. GSA said they looked at the financials and they thought it was fine. And as you know, we're talking about this years later, it was clear that Hilton was correct and GSA was wrong.
But before it was clear that Hilton was right, it did open about 2 weeks before the election in 2016. So it was open, then Donald Trump wins. Did the hotel benefit financially from Trump being president?
It's tough to say definitively. It definitely brought in revenue that it wouldn't have received otherwise. I mean, there was no shortage of Republican groups flocking to spend money there. I think there were like 220 different payments to the Trump's DC hotel in the first 14 months it was open, just looking through campaign filings with the FEC. You would find all sorts of senators, congressmen, more than half of the people who served in his administration were there. There was a foreign diplomat famously told the Washington Post that, of course, you'd go there. You want to be seen there and you want to let the president know that you went to his business. Now, the downside of that was you barely saw any Democrats there. You did not see much spending. I think Joe Manchin was the only elected Democratic member of Congress that I spotted there. But, it did scare away a lot of people. It looks like the hotel did pretty well on food and beverage from events and from restaurants in the lobby, but the room rates, people just weren't booking those rooms.
So Hilton's prediction ultimately comes true, you're reporting. So how did the hotel's actual revenue compare to what the Trump organization estimated it would be in order to get the contract?
It was significantly below. In 2017, the revenue was $52 million. That's $35 million less than what the Trump organization projected. And we got a lot of these documents through the New York Attorney General's recent civil case against Trump. And revenue stayed pretty flat the following years. $53 million in 2018, $52 million in 2019, and then obviously the pandemic hit, which is not Trump's fault by any stretch, at least in terms of business on his hotel. But then revenue plummeted 60%. And it was shortly after he left that he dumped the hotel.
So the revenue wasn't meeting the actual projections. So talk to us about Trump's journey in trying to sell this hotel.
So he first floated it on the market in 2019, according to a report from CNBC. He was asking $500 million, which a lot of industry experts seemed preposterous. Apparently, a lot of would-be hotelers also agreed. He did not get a bid anywhere near that. In fact, a lot of them even came in at less than half of what he was asking. So took it off the market and then came back and put it up again in 2021 when he was out of office. And this time he did find a buyer, someone who was willing to pay $370 million to own the lease to the hotel.
So talk to us about that, because you described the move as lucky in your piece. So talk to us about the buyer and how they struck up this deal and what were the details of it.
Sure. The buyer was a group called CGI Merchant Group. They are based out of Florida. And to be blunt, they overpaid. Somehow Trump was able to find a group to pay a lot more than what everybody else thought that lease was worth. It was a money loser. So, he clearly lucked out there and was able to walk away with a $120 million payday when the deal did in fact go through. Though, as what we learned later is that for the deal to happen, he had to provide a loan to CGI Merchant Group. It didn't have enough money to pay for some of the taxes involved in the transaction. Now, I'm not a real estate developer. I'm a journalist in a rented house. But to me, that's just a red flag if you're closing, if somebody's buying this hotel and they don't actually have enough money to cover all of the fees up front. So anyways, Trump loaned them the money that they needed, $28 million or so, and they failed to pay it. They failed to make the first payment, they failed to make two additional payments, they had to keep amending the loan. And so in June, Trump took them to court, filing that he had only received $100,000 of this $28 million loan at that point.
So now at this point, present day, how much does CGI owe Trump? And is he ever going to see that money again?
He's claiming it's $31.5 million plus interest that's accruing as this case goes through the courts. It doesn't seem likely that he's going to see this money. What happened is that CGI didn't just fail to pay Trump, it also failed to pay its main lender for the building, which is a group called BDT and MSD Partners, which is a merchant bank connected with Michael Dell. And it failed to pay, it financed most of the $375 million from them. It failed to pay them. The BDT and MSD gave them a couple chances to renegotiate or get a little extra time to make some payments. That didn't happen. And then the lender ended up foreclosing on the property and took ownership of it back in August. So what's interesting here, though, is that when Trump sold it to CGI, they worked with Waldorf Astoria. You remember Hilton Worldwide? They worked with Hilton Worldwide to go make it into a Waldorf Astoria, and now the new owners are keeping it as a Waldorf Astoria. So, we've had three leaseholders of this hotel in less than 3 years. Waldorf Astoria is now the one running it. I reached out saying, hey, do you still think this lease is financially unsound? And, they sent me back some corporate speak and did not address that question.
So the property is still a Waldorf Astoria. Talk to us a little bit about it. Is it still functioning? And what does that lease look like? And is this financially sound?
The lease is the same. No one else bid on it when it went up to auction, according to the auctioneer. BDT, MSD paid, I think it was $100 million for it. They're keeping it as a Waldorf. I don't understand how they're going to make it work when the previous two owners did not. It's a functioning Waldorf. It's very nice. I went there Sunday. I had a lovely salad with some salmon, and the hotel looks very much the same. They added some greenery to it, but it's if you look at political patrons, you're going to find campaigns like Nancy Pelosi's who have been going there. But by and large, it looked the same. And I think going back, I think Trump did a very good job renovating that hotel. And if you're just a customer going there, you're not necessarily going to notice the difference at all. I don't think you will. The level of service there was fantastic, exactly what you'd expect out of a Waldorf Astoria type hotel.
Well, Zach Everson, per usual, thanks for the conversation. Thanks for the reporting. Already looking forward to the next one.
My pleasure. Got to go expense that meal at the Waldorf now.
Hi, everybody. I'm Brittany Lewis, a reporter here at Forbes. Joining me now is my Forbes colleague, senior editor Dan Alexander. Dan, thanks so much for joining me.
Sure thing, Brittany. Thanks for having me.
The Forbes 400 list is out, so first, a big congratulations. Second, we are going to be talking about someone who has been on and off the list over the past few years, and that someone is former President Donald Trump. You write for Forbes just how Donald Trump made billions from politics, but if you could take us down memory lane back to January 2021, when it wasn't looking so good for Donald Trump, if he was ever going to jump into politics again. He had just lost the election. We just had those Capitol riots. Biden was being inaugurated. Take us back to that time.
Yeah, both politically and financially, he was in a really difficult place. Remember, the country at the time was still struggling with COVID. His hotel businesses had been hemorrhaging money over the last year. His licensing businesses had essentially disappeared. His commercial real estate properties, many of them were having trouble with, people just not showing up to work. And so all of a sudden, the demand for those sorts of properties was much less. Fortunately, people were paying rent in the meantime, but the values were way down. So he comes back to the business world really with this kind of broken up, rusted out business that is, down by more than $1 billion from when he got into politics. And then he has to figure out, okay, well, what's next?
So talk about that broken down business for us, because how did the Trumps handle their family business while their father was in office?
So Donald Trump put his two sons, Don Jr. and Eric, in charge of running the day-to-day operations. He didn't sell the business. There's some indications that Donald Trump, while he was president, was still involved. But in terms of kind of the day-to-day stuff, that would have been Eric and Don Jr. with the help of Alan Weisselberg, who was the longtime CFO of the Trump Organization, who's now been put in jail twice for financial issues. So those guys were sort of running the day-to-day. And, I talked to Eric about the state of the business in early 2017. And like his dad, he was sort of, keeping an upbeat tone, always a salesman. Things are going well. Assets are doing well. As we look at the financials now, we realize that assets weren't really doing very well. There was a significant hit to the business when Trump became president at the outset. And to Eric's credit, he also conceded that there were some challenges. For instance, he noted that they couldn't expand like they had planned to overseas, which you can see that in the numbers. The licensing and management business, which had been sort of a growing part of the empire, really just sort of dissolves while they're in office, and they're just getting lingering, fees from various deals around the world, but they're not doing new deals. They're not getting, big checks for signing up new partners or anything like that. So you've got this, the sons really are sort of just, watching the company, making sure that it can continue running, but they're not doing major expansions of the Trump Organization, not huge developments or large strategic shifts or anything like that. Mostly just trying to keep their hands on the steering wheel.
And in 2021, we know that the year didn't start off well for Trump, as we talked about earlier. He's out of office. He also, for the first time in 25 years, didn't appear on the Forbes 400 list. So talk to us a little bit about the bounce back financially.
So the core of how Donald Trump rebuilt his fortune started about a week after he left office. And he hosted a couple of guys who had once been on The Apprentice to Mar-a-Lago. And they had ice cream, they had hamburgers, and they talked business. And during that meeting, these guys sort of laid out a vision for what Trump could do with his post-presidency in terms of business. And saying, what if we created a Trump-branded media and technology company? Think TV, think social media. Remember, this is right after the Capitol riots. And so Trump was banned from Twitter. And many of the service providers, online service providers of things like web hosting, had booted companies that have been supportive or entities that have been supportive of the Capitol riot. And so they even wanted to do like some web hosting services. So it's all built up around this idea of, we've been ousted both politically and also technologically. And now we're going to build back this business with Trump's name on it to create this sort of conservative ecosystem in tech and media. And the best part of the pitch, from Trump's perspective, was that according to somebody who was involved with the deal, he didn't have to put up any money, but he got 90% of the company. And so Trump, who at the time didn't have all that much cash, is sitting back saying, well, who knows if this thing's going to work, but it's not going to go terribly for me because I'm not really putting much into it. And so that began this process of creating this company that to this day has not been able to become a successful business, but nonetheless has gotten a lot of people who love Donald Trump very excited about it. And it's gone public, and the shares have traded like mad, and Donald Trump's stake is now worth roughly $2 billion in that entity. And that makes up, at this point, about half of his fortune. So that's how he came back.
And for anyone who's covered politics during the Trump presidency, we all know that one tweet from Trump could put the news cycle in a tailspin that could last for days. And then here's born Truth Social, Trump's very own Twitter. You called Truth Social one of the most absurd businesses in America. Why is that?
From a financial standpoint, the numbers make absolutely no sense. This is a company that takes in less than $4 million a year in revenue. They, over the past 12 months, lost hundreds of millions of dollars on a net basis, more than $300 million. And yet people are valuing the thing at billions. So those numbers don't add up. But people aren't valuing it based on the business. People are valuing it based on Trump. This is a proxy for betting on Trump. And that doesn't make any financial sense. But if people are willing to pay whatever they're willing to pay for these shares, then you can get to a really big number. And since Donald Trump owns more of the shares than anybody, it's a huge amount of money for him. If you were to take Donald Trump out of this and say present to a to an economics professor, okay, so you have a business that here are the financials. What do you think this thing is worth? Or if you were to take it to any analyst on Wall Street, most people would laugh you out of the room and say this thing's worth zero. But with Trump, he breeds this immense amount of excitement around it, and that has converted into billions of dollars.
And he himself was excited about it, yet he did not invest much of his own earnings into the business. Why is that?
Well, Donald Trump back in the day took a lot of risks, okay? Late 80s, early 1990s, borrowed a ton of money from a lot of people, put his own money, what little of it that he had, into huge projects in Atlantic City and in Manhattan. Many of those projects failed. And since then, Trump has become much more reluctant to take huge gambles. And so this was just a continuation of that philosophy that he developed after he was able to survive one of the hardest financial periods of his life. And by not putting in any money, Trump doesn't take any risk. If the thing goes to zero, Trump's basically where he started. But if the thing goes to billions, which is where it is, then that's all gravy for him. And so at this moment, that looks like it might play in Trump's favor. Although we'll really see what the effects are when his shares are freed up and he can presumably sell them or leverage against them or somehow get cash out. And then we'll get to see what his final return from this whole venture might be.
So after his burger and ice cream meeting, with his initial meeting about Truth Social, he then meets Patrick Orlando. Talk to us about that meeting and how the focus shifted there.
So Patrick Orlando comes into this as the promoter of a SPAC, which is a special purpose acquisition company. This is a company that's essentially just a pile of cash that's publicly traded. And the way that Trump's business is going to go public is by merging with this already public pile of cash. And that pile of cash will then go into Trump's business and could theoretically be used to build out more platforms. So Patrick Orlando comes to Mar-a-Lago to sign documents in October of 2021 that are going to set up this whole merger. And this is going to put nearly $300 million in Trump's business, give it some significant cash to be able to operate. And Trump's excited because he's going to go back to the public markets and potentially get a huge windfall. They meet, they sign the papers, they take pictures in Trump's office in the different parts of Mar-a-Lago, lots of smiles, lots of fist pumps. Everything seems great. Patrick Orlando is very excited about it. He's talking to his colleagues, holding champagne, saying, I really think that we can build a $100 billion company, and this is the team to do it. Ultimately, he was wrong. It was not the team to do it, and he was certainly not the person to be a major part of that team.
And talk about just how problematic that SPAC merger was.
Well, it runs into all sorts of investigations, and from the SEC and various other federal authorities. And part of the problem was that, according to the SEC, Patrick Orlando had created this SPAC with the intention of merging it specifically with Trump's company. However, in SEC documents, his SPAC told investors that it had not picked a company that it was going to merge with. And so you have sort of this, what appears to be a pre-baked deal, and that's not allowed. You can't tell investors one thing and actually be doing a different thing. In politics, you can lie. In business, with the SEC, much harder. So Patrick Orlando ends up getting fired from his own SPAC, and then the SEC accuses him of fraud. The SEC also has its own issues with the SPAC, and that holds up the merger. This extends, well beyond when most SPAC deals are supposed to close, and they keep pushing it back, and it ultimately proves very expensive for the SPAC. They have to pay an $18 million fine to the SEC in order to get approval to merge, but then they do, and they make that payment, and they merge, and investors don't care a lick about it because everybody is just so excited about the idea that they can bet on Donald Trump in a publicly traded stock. And so they start bidding up these shares to numbers that, from a financial perspective, make zero sense.
So talk about those numbers a little bit, because you've tracked the ebbs and flows, if you will, of the stock prices of Truth Social and how it's impacted Trump's fortune. So talk to us a little bit about that.
Sure. So right after the announcement of the SPAC deal with Patrick Orlando, the day after that Mar-a-Lago signing, this becomes public and the shares start trading. And it got off to a little bit of a slow start early in the morning, but by the end of the day, it was up to from $10 to $45, and then ultimately surged at its high point to $175 a share. Now, at that point, investors were implying a post-merger valuation of this entity at about $30 billion. This is for a company that didn't really exist, okay? They didn't even have Truth Social at the time. It was just an idea. And you'll remember that Twitter, which was a real company with hundreds of millions of people on it, wasn't even worth all that much more than that at the time. So this made no sense at all. Ultimately, the shares did come down a bit. And what has happened over the years is that as Truth Social gets attention, people talk about it, the shares tend to go up because it's a bet purely on emotion. People who've never heard of this thing hear about it and they're like, "Ooh, I would love to invest in that." And so they go and they buy shares and it moves the stock price up. In those lull periods where you hear less about Truth Social, the stock tends to trend downward. And over time, although there have been these massive peaks and low valleys, the trend is that things have gone down. And that happened when the two companies actually merged. It went way up. Everybody got really excited. At that point, we started valuing Trump's fortune based on these, publicly trading shares. It got up to more than $8 billion at one point, which was higher than it had ever been in Donald Trump's entire life. But then it has trended down over time. And so by the time that we locked in the Forbes 400, Trump was worth $4.3 billion, with the majority of that, $2.2 billion, coming from shares of the Trump Media and Technology Group. It has continued to peter off in the couple of weeks since then, and now he's roughly at $4 billion, maybe a little bit under.
You mentioned earlier in the conversation that if you presented this business to an economist, you would be laughed out of the room. But what does Donald Trump think the value is of this company?
Donald Trump sort of showed his hand in one of his financial disclosure reports. So before the two entities merged, he said, and he had to, list what he thought this business was actually worth. And he said that he thought it was worth $5 to $25 million. Now, this is at a time when investors were actively buying shares of the SPAC, implying a multi-billion-dollar valuation. And so Trump himself has, in a way, sort of said to his own investors, what you're doing doesn't make any sense. But of course, he said it in a filing with the government that most people aren't looking at. When he's in front of the TV cameras, he says, this is an amazing business. This is the future. This thing, I'm staying in it. I'm not wanting to sell my shares, which really helps people get excited about it and think that maybe it is actually worth some of these crazy numbers that they're paying.
Forbes is reporting that he is now one of the 400 richest Americans. He fell off that list just a few years ago. So from a purely financial perspective here, why would he want to go back to the White House? Because right now he's neck and neck in the polls. He's richer out of office than in office.
That's right. Although you have to remember that when he went into the White House the first time, it was sort of a surprise. And his fortune wasn't tailored to succeed as president. Okay, this was a business that was hotels and real estate. A lot of people aren't going to want to go to your hotels all of a sudden. Well, now he's largely out of the hotel business, so he doesn't have to worry about that as much. He had these big management and licensing contracts that went away. Well, most of that, the damage is already done. What he's got now are new management and licensing contracts in places like the Middle East, where people might still like it and maybe even like it more when he's president. And then he's got this social media business. Remember, divisiveness is not good for businesses generally. Divisiveness, however, is good for social media businesses. So Trump's fortune is now positioned in a way and has changed enough that being in office now probably will help him, even though the first time he was in office, it didn't help him.
Talk to us a little bit about that. And do you think that he will learn lessons of the past? Because trying to monetize the presidency really backfired on him in his first term.
We'll see. Trump is, he plays the same cards over and over again. So we'll see, if he has learned various lessons. But there are things that he could do that would be smart business moves. For instance, he could say, hey, look, the first time that I was in office, it was really difficult having this business and having all this attention on it. And I've decided that this time I'm going to divest my business. And that would be a smart financial move because you wouldn't have, in the real estate assets, you wouldn't have all the problems that complicated them before. Now, then you've got the social media business. In that business, he could say, well, I'm still going to remain a shareholder, but maybe I need to take a little bit off the table or something like that. And that would be wise of him because it would allow him to presumably cash out at these sky-high valuations. What's Trump actually going to do? If history is any indication, he's not going to do much. He's going to, hang on to his assets and see what happens. And it could be that the real estate assets suffer more. It could be that the social media business continues to get people excited, maybe even more excited when he's in office. But all of this is unprecedented, and so we just kind of have to wait and see.
Something else that's unprecedented for Donald Trump is certainly the mountain of legal troubles he's facing and has faced in the past year. How are they going to impact his fortune?
It's a big problem for him. Donald Trump right now, including interest, owes an estimated $566 million in legal costs. That's due largely to his fraud case in New York, but also the two judgments in E. Jean Carroll cases. This is the woman who accused him of sexual assault in New York years ago. Those two cases have put huge financial strain on Donald Trump. Right now, he has about $413 million in cash by our estimates, which for him would be a ton of money, should give him lots of freedom and flexibility. Instead, those are outweighed by these massive legal liabilities. And although he's appealing the cases, should he lose, he's going to have to hand over the money. And while he's appealing, those are continuing to accrue interest. So, he's millions of dollars, every few months are being added to Trump's liabilities because of these lawsuits. And so that's just hanging over him. Now, one area that he could quickly get a lot of cash is the Trump Media and Technology Group. And if he sells shares of this company, suddenly his balance sheet will be in much better shape. And so that's certainly something to look out for. If he sells $200 million of shares, well, he still owns a ton of the company, but now his personal balance sheet has a lot more freedom and flexibility. And that huge weight of those legal costs isn't quite as burdensome as it was. So look out for that in the next few weeks and months.
Dan, something that's not so new is rich people running for office. But what makes Donald Trump different?
Rich people usually run for office and lose money. And Donald Trump did that, and he lost money. But now he's running for office, and he's made a ton of money off of it. When Trump left the White House, he comes away with a new asset, which is crowds of people who are willing to buy virtually anything from him at almost any price. That is NFTs that he's selling, these superhero cards of him flexing his muscles or whatever. That's memberships to Mar-a-Lago, which are getting more and more expensive every single year. They're now going for rumored up to about $1 million. I mean, these are numbers that don't make any sense to people who are in the club business, that somebody would pay for that. But this isn't a typical club, and people are willing to pay huge numbers to be a part of Donald Trump's spectacle. It goes to, he just launched these digital coins. He's selling coffee table books full of photos in the public domain. All of these things are, he's selling assets that if you look at them for their intrinsic value, there's not much there. But people are willing to pay huge, huge amounts of money for it. And by doing that, he has more than anybody else and at a greater scale than anybody else converted the presidency and converted politics into a way of profiting.
And he's ping-ponged off the list over the past few years, back on it in 2024. Do you think in 2025, whether he wins or loses the White House, we are going to be talking about him now as a member of the Forbes 400?
Well, it's a very good question. I think that it's largely dependent on what he does with the shares of the Trump Media and Technology Group. If he sells those shares, he will have locked in huge gains, and he wouldn't lose that money. If he hangs on to the shares, as he says he will, this company, the financials of it suggest that it's going to continue to decline. And so he could lose a tremendous amount of money simply by doing nothing. So if he sells his shares, yeah, he could stay on the Forbes 400 forever. If he doesn't, it would not surprise me if he falls off in the near future.
Well, Dan, per usual, I appreciate your reporting. Thanks so much for joining me.
Thank you, Brittany.